But I wanted to start like we did a couple weeks ago with just some of the, let's take a temperature of the market. There's been, like I just alluded to, some really explosive moves to the upside, especially with some of the companies in our portfolio. But we've also had some weakening internals of the market, if we don't want to get too technical. So it's been yet another interesting 2 weeks. I wanted to get your take on just how are you feeling now? We've had some softness, but there's still some craziness going on in the market. So what's catching your eye from that high level point of view?
Yeah, David, I've previously given on a greed factor. The market was at an 8.5 or 9. We're seeing some of that come back right now, and especially it's coming from the Federal Reserve. They had their Federal Open Market Committee this week. Powell, he kind of changed his tone. He said it was a closer decision to cutting rates this previous time, and we have kind of consensus now at the median point for a rate cut next year in 2025 is 0.5%. We've seen, if you just want to look at something that impacts everyone's lives, just look at a 30-year mortgage. And in September, when it looked like rates were really going to come down, they dropped, I think it was down closer to 6%. And now, David, I think they're at 7.5% again, right? So that's really telling the story. But we did it a few weeks ago. We did our rate at 1 to 10 for some of the froth. So, it's coming off a little bit right now. But David, I went through and I cataloged some of the frothiest sectors I'm seeing of the market. And what I want for you to do is rate them all 1 through 10. So are you ready?
I think I surprised you with some of my lower scores last time. So maybe you can find something even more ridiculous.
I have a prediction what your lowest score is going to be here. And it involves a flatulent cryptocurrency. So we'll see if I'm right on this one. So the first bucket I wanted to do was AI stocks. I went through and looked just for stocks that have added AI to their name. And what I found is they've seen an average spike of 196% in the back half of the year. So I'll give a few examples of this. C3 AI, David, we've talked about them. I find them to be one of the more cynical examples of adding AI to their name. The C in C3 originally stood for carbon when it was a climate change company. Then it was C3 IoT. Then it was C3 energy. Then it was C3 AI. Fourth time is the charm. It was up 103% from September 5th to this week, December 17th. And it would be one thing if the results backed it up, but the recent earnings, they took their guide for revenue next year up 8 million, but their loss is up 10 million. So, David, you're not making up in volume here. These are not good earnings. We're not seeing a business acceleration. We've got Big Bear AI. It's a business intelligence company. It's headquartered in DC. It's got a lot of government work. It has been up 196% recently. That's just from August 6th to December 9th. The problem, I looked it up, their Wall Street estimates for sales next year have actually gone down during this period. They were 199 million in May, now 192 million. So once again, we're not really seeing business acceleration behind this change. SoundHound AI, I would say it's probably the most exciting business of this bunch, but it's up 319% in the past month. Well, why? One example was they were up 20% on news. They signed a local taco chain, Torchy's Tacos. Well, I'm sure Torchy's Tacos are delicious. My math shows they get about $1,400 per location signing up for their customer service solutions. Torchy's Tacos has 130 locations. So that is 180 grand in incremental sales, give or take, adding more than $1 billion. If 6 figures of revenue is adding 10 figures to your market cap, we have some exuberance. So a couple others, David, we've got Airship AI. I have no idea what this company does. I just saw they were up 35% yesterday. They're up 122 since the start of November. And the last one I found, Bullfrog AI, tiny microcap with 4 employees focused on drug discovery. They are up 205% in the past month. So, David, looking just at companies with AI in their name, the incredible jumps in share price recently, with very few showing added momentum behind their business. What would you give this on a scale?
I'm going to give it a 7, which is high, but to get a 10 or a 9 from me, there has to be a surprise factor. This isn't a surprise. We see this when we have big trends in the market where companies that are very promotional in nature try to take advantage and add that. I think there was this happened in 2017 with some Bitcoin companies. I think there was a beverage company that was like, actually, we're .Bitcoin now. Or so I'm not surprised by it. In a weird way, I welcome it because I do think when you have these companies in the AI space who are trying to capitalize on the promotion, they lead to these, I'm going to call them overvalued companies. There may be some shareholders out there who's like, no, you don't understand SoundHound. I'm going to call it overvalued. I think it can benefit us who are looking for these real businesses that are benefiting AI, because it can be easy to lump in and be like, oh, everything in AI is just a bubble and everything's just inflated. And I welcome that. Sure, if you want to spend all your time looking at this, we're going to go try to find the companies that are real. And again, we've a theme that we've tried to bring to this show is let's talk about the business results. It's great. And again, we're going to talk about some of these companies that are surging. It's usually because they've posted impressive results that have beat estimates or they're raising guidance. So again, it's all a sideshow. It's fun to look at, but would remind our viewers to look at the companies in our portfolio. You're not going to find these promotional type companies. I mean, I think C3 AI, the founder, he's done very well for himself. I think he's got a track record of being a little bit promotional. You can go back even to the .com days. He's had several companies that are trying to take advantage of kind of what's hot. So not surprising. We're going to see this every single market cycle.
All right. Well, I think I've got something that I can beat a 7 here. You mentioned a beverage company. I have quite the former beverage company. So quantum computing stocks. Google just made an announcement on December 9th that has really focused enthusiasm in this sector. If we look at Quantum Computing Inc., D-Wave Computing, Rigetti Computing, and IonQ, since the middle of October, we have Quantum Computing Inc. up from $1 to $17. They were up 2,500% at their peak. We have D-Wave Computing from $1 to $9, Rigetti from 80 cents to $9, and IonQ, the laggard of the bunch, from $10 to $40. Now, David, I don't want to get into the details on quantum computing. It seems there is a legitimate scientific breakthrough that Google had announced on December 9th, and it created a lot of hype. The press release talked about potentially proving the existence of parallel universes. You don't see that every day. But the reality remains there's incredible hurdles to the commercialization of quantum computing. It is still a significant amount of work that needs to get done to ever have one with practical purposes. And Quantum Computing Inc., let's just focus on that. We talked about in our November 22nd episode, where I first had you rate craziness 1 to 10. The highlights of this company it was a soda company. There is something rhyming here, as you mentioned earlier with 2017, that was purchased out of receivership by a former homicide detective. It had about $400,000 in trailing revenue, but in the past year, it was only able to collect 14% of its revenue. And David, you gave the stock a 9 when it was trading for $500 million. But let me update you. Well, after that last episode aired, it soared up to $3 billion, a jump of 6-fold in less than a month. It is worth noting, as we filmed this on Friday, it was down 41% yesterday. Take it back to a very reasonable $1.8 billion. So, David, let's get your rating on the acceleration of quantum computing stocks.
I'm going to go to 9.5. I'm going to withhold the 10 because I think we have something stupider coming. But I'm going to give it a 9.5. I can't explain the movement in these companies. I would not recommend I'm going to go buy some puts on quantum computing, or I'm going to try to short it. I don't know what's going on, whether there's algorithms trading this or you have momentum shops that are in this name and you're just seeing really explosive moves. So I would stay very far away from it, even if I have high confidence that Quantum Computing Inc. is maybe not worth 2 or 3 billion. I don't think there's a way to play smartly, at least from my perspective, the potential downside here. So I'm going to give it a 9.5, but I'm staying far away from putting money on that side of the bet.
Yeah, and I think the key point is it's not that we don't think there's something deeply fascinating about the concept of quantum computing and some of these advances, but both you and I, David, we've been on the other side of seeing feedback loops that a lot of people don't see in terms of investor interest owning financial websites, working on the biggest financial websites in the world. And I would say your pattern recognition of a lot of these companies in these hype cycles and the type of interest that spins up it's generally about 90% accuracy when you can tell something is going to rise up and fall. And I would say quantum computing stocks match that pattern recognition extremely closely. So let's get to the last one. I'm going to keep it short and sweet. We're talking about Fartcoin. David, I had sent a Reddit post about a wife bemoaning her husband putting their life savings, about $175,000 into Fartcoin. Well, since that time it is up 500%. Fartcoin as an asset is now worth $1.1 billion. I have nothing further to add. David, what is your rating on Fartcoin?
Fartcoin's got to be a 10. It's a 10. We've reached the level of Fartcoin. And I would love to know if anyone that seriously owns Fartcoin, take a screenshot of your brokerage, send it to us. We'll make some swag to you. I would love to meet someone who actually owns this in any meaningful size, because this is a 10.
Yeah, and at the end of the day, as we were talking about, we're probably seeing a little air coming out of the market right now in light of kind of Powell's comments, the FOMC decisions. It's relatively healthy to see some air come out, and it's not because a lot of stocks don't trade for relatively reasonable levels. We've talked about Nvidia for many people being a poster child of the current market era, but it's actually seen its share price increase less than its earnings. It trades for around 25 times forward earnings right now. So there's two very different things that we're seeing in the market right now. It's slightly, it's elevated levels in market PEs relative to historical precedents, but we are just seeing other sides of the market, these very speculative areas, overheat. So to see some pressure come off, that's relatively a good thing in our opinion. As I said in prior podcasts, I welcomed it, because the other side of that is if everything overheats too hot, we get a repeat of 2022. You're going to find some outstanding deals amongst the wreckage there. You're able to buy things like Amazon for $80 a share, but you're also going to feel incredible pain where a lot of stocks overshoot, and the market itself at that point was down, I believe, 27%. And a stock like Meta hit $80 a share. So again, some opportunities if that happens, and we will be ready, but all the same, I think that moment feels a lot more painful than you would think it was, just kind of distantly analyzing it right now.